Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss.
Hi and welcome back to the Conscious Day Trader. If you're new here, I'm Yanis, and today we're going to break another trade on the euro dollar and the DAX. This is going to be ICT London kill zone, and I'm going to show you my entry, how I found my bias for the day, the execution, and where I put my stops, and how to think about stops and managing your trade. So if you like all that, make sure you like and subscribe to this video, as I want to continue and provide this to you guys, and the more subscribers and likes I see, the more motivated I get to do this. So let's jump on to the results first. And as you can see, we made a 462 in profit. We had €1 trade on the short side and buy side for the DAX. And as with always, we do all our analysis on TradingView. So we're going to go on to the euro dollar. And on the first thing that we want to do with the euro dollar is identify our bias, and straight away we're going to go and see, I've labeled to see where I entered for you guys. Let's go on the 15-minute and take away the previous candles, just so we can see what happened live. So this is New York time. We'll change it to London, and we'll go to I started looking at the charts at quite late today, 8 o'clock Italian time CET, so that was 7 o'clock roughly, where I looked at it. Now the first thing that I could see is this huge break of this structure. So someone would say, okay, so that's indication to go long. You would be right. You could have traded that back into here and traded that on the upside for 10 pips. You would have taken 10 pips on the long side. The reason I was short was I thought the market will come and take out this sell side liquidity. And second of all, you can see that red candle, which is my previous daily high. If we look how far we are from the previous daily equilibrium, and this is the low that created from yesterday. Today we're on the 12th of 12:40 current time on the 25th of January. So the 24th created this low and this high, and we're trading above it. Now, is there anything that can go in target above? Yes, it could go all the way and take out these highs. But what you also want to see on the left side here, if it had any fair value gaps that it could potentially go up to and fulfill that gap. And as you can see, there's that fair value gap there that hadn't fulfilled fully. And it came in and took it out, failed to break the highs above here, which would be your buy side liquidity. You can either take this, but because you've got multiple touches here, you can take that there, including the wick. That would be your buy side liquidity. So the market can do two things. It can either push all the way up into this buy side liquidity and then shorting itself. But as you can see from the whole day, we've been buying. So a retracement into the daily high was quite likely. So I was biased short, especially after we filled this fair value gap and failed to go into the buy side liquidity. And if we're currently on the 15 minutes, what I was looking for was a possible entry. And to find that, we went on to the 1 minute. So I was looking for a break of structure to come back and fill a fair value gap and the continuation down. So if we go one down candle, and we're still looking at that fair value gap from the daily. And here we had that break of structure. Now, someone will say that's not a convincing break of structure, but because I was confident in that we were far away from equilibrium, we were above the daily, and I didn't think we're going to be going into that buy side liquidity. I was just looking for an excuse to get into the short side of this trade. And I got that trade. You see this fair value gap here, and we'll see the market coming back up, and it created this second fair value gap here. If I take that daily fair value gap out, so you can see now the actual trade. So we had a strong break here. That would be in the strong break, that one. It didn't fill in, so then it came back up. And if you're wondering which break I'm talking about, is below this intermediate swing low. So we had a break of that, and then the market came back into this fair value gap, and I got my entry exactly at that area there. And I held it for 10 pips. And I was a bit annoyed that I didn't hold it for longer, because the reason I took it out is because we do our morning calls. 10 pips would have been here. I was looking for the market to go to sell side liquidity below here. That would have been my nice target. And as you can see, we have fair value gaps here that haven't been filled. So target 1 will be these lows, target 2, these fair values, target 3, this sell side liquidity. And as we can see, as I mentioned, I took my profit on that move there. And if we measure that, it will be roughly, I went a bit lower, 10 pips, close to that sell side liquidity. I started seeing these fair value gaps filling, and we're below the previous daily low, daily high. And that's what got me out, and something I need to work on in the future. So the market went into sell side liquidity that we identified. It did have a reaction. So what I should have done is brought in my trailed stop into this fair value gap and see if I would have been taken out. No, I would have been going a lot further down into 17 pips. Now I could have brought my trail stop back in. So if we do that, so this would have been my first one. Now it's created another swing high. I could bring my trail stop here. Market moves even lower. We're currently at 23. As I said, I didn't trade this. I stopped my trade after 10 pips, so roughly around here. And the market continued, I believe. Yes. So it went 26 pips, and let's see, this is another swing high. So this would have been where I would have been stopped out. So instead of making the 10 pips, I would have made 18 pips. Okay, not a huge difference, but if you held it and you kept to your original stop, which was up here, for the entire move to the equilibrium, we'll see if I take out the whole chart, replay, you will see it never came up and it went all the way down to equilibrium, providing an enormous 50 pips. So that would have been my 500 trade of the day. I didn't do that. So that was my first trade. And as you can see, I got, if we go back onto my N5, I got $144. That's shorting the Euro USD at the profit of 108899. So the second trade was the DAX. So let's jump back onto the DAX and let's see why I traded long. I did post this in the Scruffy Squad Discord as it was happening. Make sure you go and check out the Scruffy Squad, and Gary, who runs the Scruffy Squad, is the Scruffy trader, extremely good trader, and most of the things that I've learned in terms of managing trade comes from him, so check him out. Obviously ICT trading, what I saw, it was this on the daily. We put our daily values in, and we've had this, if I can take that black box away, we've had this enormous move on to the upside. Where could that be going? As we've discussed in the previous, it took out this highs here and these highs here, and there haven't been any clear direction of where it could be going higher. So I'm expecting a retracement on the DAX, and that retracement, if you wait for it, it can give you a nice opportunity to go long. If you're trading into this fair value, obviously this might take days and weeks. Okay, so let's go on to the 15-minute for the DAX. And as you can see, as of like the euro, what I identified was that drop here that started in the London time from 8 a.m. It sold off. Let's drag on these sessions so you can see where we are at. FX market sessions. London kill zone created the high, the manipulation, then accumulation and distribution down below the equilibrium. And that created an area of from premium price into discount. And I had identified, if I take this area here, and like I said, I shared this into the squad, I anticipated that this will be dropping below to take side liquidity from these equal lows. Here is also equilibrium, and it's also been on a huge up trend for a while. So we're expecting a drop off into to become discounted to trade higher. So as we can see, I was in the euro when this happened this morning, closed the trade, and then I saw this move here. Now my entry came later. As you can see, this move crashed all the way down here. So now I was waiting for an opportunity to go in. As you can see here, you can see this blue box, which is normally where I refer to as the gaps. If I take it away, you will see there's a gap between this low of the candle and this wick of that candle, and that's not a fair value gap. That is an actual gap in price. So there hasn't been either buys or sells. The price jumped down, and normally these prices want to get filled back up. So that was my target. I believe that the market would be going up there. As you can see on here, because we had that sell-off and we're not deep into equilibrium, I was worried about this coming down into the low of the previous day. And also it's on the daily, the previous low, there was a fair value gap there that could be coming to be retested. So I was a bit cautious on my entry, and I wanted to see a really good break of structure, retest. I didn't get into the first fair value gap. I got into the second wave, and I'll show you this. So that will be your first opportunity, because what do you have here? You have break of this structure here of the intermediate high, and break of this. And now we're in this fair value area here. Okay, so if this was going to continue down, this value is being filled and it would continue down. But I was convinced that this, since we had multiple areas, that this is going to be retested back into equilibrium, taking this gap out before it comes to either take out the previous daily lows or continue on to the upside. So I was waiting for this to happen. That was my strong break, and then as you can see, came back down, and that's where I got triggered, and it went up and up and up, and that was the area where I got out. So from here I made 300 and let's see, 348. So that would have been a little bit higher, 40. I kept it up to that point there. So super happy with that trade. And as you can see, if I had held again, retrospect is always, you can see that it's gone even higher, which with a maximum of $500. So both of those trades would have given me a single trade on a one lot size, would have given me my target. Where would I been stopped out if I had done that? So my entry will be there. If we do the same with the trail stop, so I could have trailed the stop there, then moved the trail stop to that point. I wouldn't have been triggered to that point, I wouldn't have been triggered there, and I would have been triggered there if I had kept it for longer. So that would potentially been taken out as my target if I had done my trail stop. And I think I'm going to try that tomorrow. I'm going to trail stop the profits. The only reason is hard to do that is because if I don't take my profit up here and I trail stop here, I'm only getting 14 pips compared to my 30 pips. So that's something that I need to work on, and well, let's do it tomorrow. I just quickly wanted to show you the current month. We are having the best month that I've ever had. Currently running on 9,424 in profit. We still have Thursday, Friday and Monday, so 3 days more to trade. So we'll see how that turns out. We're currently running on 100% win rate, and we'll definitely not risk too much to close the month. Make sure you subscribe and like the video, and I'll catch you tomorrow.
Run it, I can't take no loss.